Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I would like to look at a good example of our VS or volume spike trade setup that unfolded on a 3-minute chart of the YM yesterday. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand that losses can and will and do happen. It doesn't matter what trading approach you have, there always will be losing trades. Right, let's take a look at the 3-minute chart for the YM yesterday. This is a day session only chart where we look at the chart during the American day session from 9:30 to 16:15 New York time. For those of you who haven't seen other MTPredictor videos, we do not follow MTPredictor as a black box system. In other words, you can see the setups on our charts here. We don't blindly follow these, perhaps in the direction of our MTP trend, which is blue for up, black for making a reversal, and red for down, 100% of the time. The reason we don't have a black box system is we understand that markets are basically random half the time. In other words, half the time there's no discernible pattern, and basically any kind of analysis is quite difficult and unreliable. So what we do is we look to see when the markets are making a clear picture. For this, we wait to see whether the markets are making a clear reversal at our anticipated DP support and resistance zones on our higher time frame chart. This is on a chart between 3 and 5 time frames higher than the one you're actually trading on. So for example, if you're trading on a daily chart, you'd go to the weekly chart. If you're, say, trading a 4-hourly Forex, you'd go to the perhaps daily, and in this case on a 3-minute chart you'd go out to the 15-minute chart. I'm just going to put a bit of white space on the right hand side of this so we can just scroll the chart across. So this is what we do. Can you see here, earlier in the day the YM made a high here? Do you see that? It made a pivot high, it then came down and then we're starting to rally back again. So at this point you can right mouse click on this pivot, then select decision point. Just wait for a second while that displays. There it is. And can you see how that's on the chart in advance? It's there before the market even gets there. So what we're looking to do now is to see whether the market gets up into that level. We're not projecting that it will. We just say if it does, we then look to see what the market's doing. So as we can see, it did indeed go up to that level, which actually made the high of the day. So when we come down onto our 3-minute chart, this is what it looks like. There's our higher time frame resistance zone. You can see it's on the chart in advance. Our MTP trend is blue to tell us that our large degree trend is still up. So let's see what happens as the market goes forward. It goes up, it goes up. It then makes a wide range bar on a high volume spike, and this is where we come down to our VS indicator down here, and you can see that it's picked up that as being a red bar. In other words, it's unusually high volume. It's made a break above the previous pivot high. Normal amateur traders would look at this and say this looks like a breakout and then look to go long. But we know we're now at potential resistance that we've had on our chart literally for hours and hours beforehand, just ready to see what happens if the market gets there. The next bar, which was here, it then makes a red sell bar and gives us our VS or volume spike sell setup. So at this point we can right mouse click, do analyze trade setup, and that then gives us our target down here for our potential trade. I have to scroll across a bit because the levels are not shown on the chart when I scroll there, but at the time it would have been shown there. We use position sizing to keep our initial risk small under control. So here we're risking less than 2% of a sample $20,000 account, and this would mean being going short potentially 6 contracts. You can see it took you into a short trade here, with this being your potential target. The reason we like VS setups is because they get you in the direction of the professional money. In other words, back here the professional money was faking out or wanting to get amateurs on the wrong side of a move to new highs. In other words, the amateurs were looking to break to try and buy the break to new highs, but the professionals were selling to them and getting on the opposite side, ready to move the market strongly and quickly in the opposite direction. This normally unfolds at our decision point level, so we were there ready for that level in advance. And as you can see, the market did indeed go down. Here was our projected target, and if I scroll forward, that was pretty much the low of the day there. As the market went down, the potential profit was 13R, or 13 times the initial risk. This is why we like these kind of trade setups, because the potential profit is large, not just in dollars, but in risk reward units. In other words, in relation to the initial risk you'd have taken at the top here. In other words, the losses you would have made if you'd had a losing trade. Interesting enough, if you'd missed that and you'd come in here, there was a potential sell setup here, and this would have actually been a losing trade actually, because if we look at this, it would have taken you in short and just clipped you out before then going down. So this is what I mean about losing trades and why we use position sizing, because when the losses come through, and there always will be losing trades, the losses are kept small at 1R or 1 risk unit. But ideally you would have been in this short trade from the top here already, and this is the trade setup we were looking to analyze today. So as you can see, this allowed you to anticipate a trade setup that nailed the very bar of the high of the day there, and then allowed you to hold that short trade down into there to a potential target zone. Again, that would be on the chart right back here, so it would have been on the chart as soon as you did your analysis, and that was pretty much around the low of the day there, caught the reversal around the low of the day. So as you can see, that was a very good trade indeed, but it was all set up because we managed to have our 15-minute resistance zone on our chart in advance. In other words, that was there ready before the market even got there. In other words, you're anticipating an area of where you'll be looking to look for a reversal, and indeed that's where the reversal came in, right with our volume spike or VS setup. And as you can see, that produced a very nice trade setup as the market declined sharply later in the day. So hopefully this has been a good example of not only our VS setup or volume spike sell setup in MTPredictor, but also the use of our higher time frame support and resistance zones to anticipate where reversals may well occur in the future.